Time to short the Yuan by www.theforexnittygritty.com. China may be heading into an economic crisis. Is it time to short the yuan against major forex currencies? If it is time to short the yuan, which currency should one trade against? If the Chinese economy tanks, Australia will be hit as it exports a lot of raw material to China. Japan is a major trading partner of China. Will the yen devalue further if the yuan falls? Is Canada and the Canadian dollar safe? How about the US dollar if the Chinese currency falls due to a debt crisis and falling exports, or even worse, a political crisis? Forex factors and how they affect the yuan. Fundamental analysis of Forex pairs requires good fundamental analysis followed by up-to-the-minute technical analysis. The value of a currency depends on politics, monetary policy, balance of trade, currency reserves, and economic stability. Shorter-term, technical analysis of market sentiment hinges on pronouncements and actions of central banks and technical trading factors. While technical analysis can give traders an advantage in short-term trading, the fundamentals are what drive currency prices over the long term. How to trade Forex successfully is typically to use fundamental analysis of Forex pairs to gain a sense of the market possibility, and technical analysis to spot short-term opportunity. With these caveats in mind, what drives the yuan today? Real estate bubble. China is overbuilt. At least on the high end, there are way too many big projects that are sitting empty. At the same time, many smaller projects that could benefit the community are not happening. Capital that went into mega construction projects is not making money, and at some point, foreign investment will back off. If the real estate bubble in China collapses, it may well bring the value of the yuan down with it. Debt crisis. Transparency has never been one of China's strong points. Hidden debt and unaccounted debt threaten to bring down the Chinese economic system. The situation is reminiscent of Japan 20 years ago, when the Japanese economy was riding high and Japan investors were buying Rockefeller Center and the Pebble Beach golf course. Handshake loans that had been hidden from public view helped bring down the Japanese economy, which proceeded to flatline for the next 2 decades. A debt crisis would be a good reason to short the yuan. Slowing exports. The worst recession in 3/4 of a century has taken its toll on China. Its biggest customer is Europe, and the EU is ridden with recessions and flirting with the loss of members on its southern flank. With exports down, the rate of growth in China has fallen from the 10% per year level over the last years to 7.5%. Economists are projecting that the next stop will be 5% a year and even lower. How to trade Forex successfully in this case is to be aware of the fundamentals that drive the yuan versus the euro, US dollar, and other major currencies, and trade accordingly. If you are going to short the yuan, do your own fundamental and technical analysis and do not rely on tips. For more insights and useful information about the Forex markets and foreign currency trading, visit www.theforexnittygritty.com.